Being successful in real estate obviously is having lots of great connections, but also if you're going to buy and fix up and flip, you need the best of the best in all of the aspects of redoing the house. You need great drywall guys and plumbing and heating and air conditioning. Maybe you can't afford a general contractor because they're going to take too much of an override on everything, and you can handle some of your own things. Now, I don't know what all the laws are and where you're buying things and having licenses and things like that, but I think what I'm talking about here is it's important to collaborate and partner with some amazing people when you're in the business of looking for real estate deals, financing real estate deals, and getting financing to help you get these real estate deals. One important thing that I always like to put together is a powerful business plan. And you say to yourself, well, is buying a piece of real estate a business? Well, if you're just going to buy one, yes, it can be a business. If you spend five, six, $800,000 to buy something, now you're going to spend the next 6, 8 months, a year investing more money and fixing it, and then you're going to resell it. That is a business unto itself. And so I'm not going to, we have little time today, so I'm not going to take up all our time talking about the 9 steps to a business plan, but this is important that if I'm an investor and you're talking to me about investing in your real estate project, I want to know, number 3, competitive analysis. Who else is out there in this particular market that might be doing the same thing? How have they done? What are some of their deals? And let me see how that's worked, right? So it's important that there's certain things you cover, the management team. Maybe you've got some, like we've talked about, you need to have that great board of advisors and advisory board and dream team as part of your company. So we're going to talk about projections and numbers in just a bit, but it's important that you ultimately, and let's say you're going to be buying multiple pieces of real estate. Maybe it's going to be an ongoing business of buying real estate and then making profits on the real estate. Now you've definitely got a business, and so you need to have people that are responsible for operations and management and all of the things that are required to protect the people's investment in their money, because this is something very powerful and important. I always like to also mention, because I found this out, I've raised hundreds and hundreds of millions of dollars. I mean, I'll give you an example. I had a $20 million raise I was doing. Company came to me. They needed $20 million. I put the first $250,000 in, and then I went and raised the other 19 plus million. And we had 97 meetings with individual investors. And the important thing for me, before I got too hot and heavy with the investors, was to understand really what is it that they like to invest in, and what are some of the deals that have worked for them. So obviously, if you're looking for them to invest in real estate, you want to find out, have they been involved in real estate? What happened? Was it a buy on the front end, hold for a long time, or did they want to buy, fix it, flip it? These are sweet spots for different investors. Some people, if you look at the last one, quick ROI. Some investors, they want their money back quick. I mean, I'm the type of investor that doesn't like to sit with an investment for more than about 18 months. So I mean, some people say, hey, I'm in it for the long haul. I could give you my money today and I don't need it back, but I want to, if you hold it for 5 years, I want to see a great return, right? So, a long-term investor is different than somebody that wants that quick ROI. So I think it's important that you understand what your ultimate investor is looking for. And so on that note, let me give you an example of a technique that I've used to get investors on board, because I'll say this, the toughest money to get when you're raising money, what is it? Let's see if anybody knows. Think to yourself, what's the toughest money to get? The first check. If you're raising $1 million and you're doing it in $50,000 increments. So you need 20 investors at 50 grand apiece. Getting that first 50 grand is the most important and the most powerful, because if you never get the first one, you're not going to get the second through 20th, right? So you've got to get somebody to make that deal. So sometimes we create accelerated paybacks or sweetened deals for people that are taking more risk than others if other money has been raised. And I mean, just forgetting about real estate now, if I were to say somebody comes to me and they've got a private company and they're looking for $100,000 for 10% of their company. The problem, if I write them the check for the 100,000, the question is, now I own 10% of a private company. When am I ever going to see my money back, right? Well, if we don't have terms and conditions and an agreement that calls for me to get my money back under something other than when they sell the company or they distribute profits to the investors, maybe an accelerated payback is a way that could get me interested, because I have a hard time today investing in private ventures that don't have an exit strategy, because my money can just sit and sit and sit and it's sunk and I can't get it out. Well, that's one of the nice things about real estate, is many times you're buying, flipping, selling, liquidating. So that's a powerful thing and can be better. So as we look at some of the real estate things that you need to be doing, what do you need if you're pitching your business to real estate investors? You need a description of the property and the area. You need a purchase and sale agreement. Sorry about that, moving a little fast here. You've got to have comps, comparables, showing other deals that have been done in the same neighborhood or in a comparable environment. If there's rental involved, you've got to show current rents, rental comps. Obviously, you need to have all your costs buttoned up with your contractors for your repairs, the estimates, the plumbing, the air conditioning, the electrical, the tile, the this, the that. And I said before, one of the most important things to me as an investor is, what is the exit strategy? So if you don't have a good exit strategy, I mean, it's easy if the plan is buy it, fix it up, flip it, and move on. Okay, that can be an exit strategy, obviously, but an investor wants to know that, what kind of time frames are we looking at on the tying up of their capital? Because if I can take 100,000 and invest it and get it back in 6 months, then I can deploy it again a second time. And if I'm getting a great return on that, it just keeps multiplying. So this is how investors often look at their whole situation. So I think the bottom line is that you need to have a compelling pitch for an investor when they're going to get their money back. One of the things also here that I think is important to stress is, what is your background in the industry? What are some of your other projects, your track record, your credibility, etc. And this is very important because, quite honestly, if it's your first real estate deal, I may not want to take that risk, right? So sometimes that's why the term partner with somebody is another scenario to do. I mean, a friend of mine called me up and he's like, "Hey, look, Kevin, I'm running into all these real estate deals," and he's in the business of construction and all of that. And he said, "How about we do this? I'll find the deals, I'll manage the deals, I'll do everything. You put up the down payment and you'll get your first money back and we'll split profits 50-50. So, I mean, that's finding a great partner. Those deals are out there and available. And I know people that actually do those deals, and I've done some of those deals also myself. So that is another scenario outside of where you're raising capital, because raising capital is in the United States, what we do is we put together a private placement memorandum. It's called a PPM. And a PPM describes the investment strategy, what you're going to be doing, and allows you then to talk to a certain number of investors. And now you can raise capital on that PPM based on the structure of the PPM. So now you just have to get out and get investors. And investors, you can find them. We do advertisements on Facebook, on LinkedIn, on Instagram for investors. We're doing the same thing on many of these now crowdfunding sites. There's not only the crowdfunding sites like Kickstarter, but we've done a number of deals on crowdfunding, on equity crowdfunding sites. So this can also be a very nice way to take a look at raising some capital, because equity crowdfunding, you're describing the real estate transactions that you're looking for, and you also are then at the same time agreeing to give little pieces of equity to folks that will invest in that. So one of the crowdfunding sites I use is a site called Republic, and Republic has done 175 plus deals between $500,000 and $1 million. So it's in that kind of smaller number sweet spot, but a good number for single family homes, maybe a small multifamily, et cetera. So anyway, yes, it's the key here again is coming up with a great pitch. So I can't sit here and talk to you guys all day today without talking a little bit about pitching. So here's my 3 steps to the perfect pitch. You need to tease, you need to please, and you need to seize. And so when you tease, you get their attention with a problem. And here's a real estate transaction. There's a problem that exists, and you now are going to show the please, which is how are you going to make that investor get benefit from that problem, because you're going to be able to show him how you can come in, buy it at the right price, fix it up, sell it, make a profit. So teasing and pleasing, and now the seizing. This is the most important part, is seize. If you don't have an irresistible offer, investors, they're going to know if the deal doesn't make sense many times, right? They're not going to move. If you don't incentivize them enough. This is why I was also talking about this accelerated payback. That I've seen deals go down where by accelerating a payback. So let me tell you how I do it in the product world. Somebody says to me, okay, I need $1 million for 50% of this product deal. Okay. Now I'll say, okay, if I put up the $1 million though, I don't want to wait to get it out of future profits. Maybe I'll get a royalty of $1 a unit sold on every piece of product that goes out the door. Okay. Now that's a little tougher to do in real estate, but maybe there's an acceleration of profits until the investor gets their money back first, and then they continue with an equity stake to be agreed. So I, as an investor, love hearing from someone pitching me that they want to make sure that I'm getting my money back. Okay. So, because I can tell you hundreds and hundreds of deals that I did that I didn't get my money back. Right. So those I don't want to do anymore, and I'm not going to. So anyway, I just wanted to spend a few minutes here rather. And it was nice of Sunil to have me talk a little bit. He and I talked yesterday, and I just need to mention about my real belief in what Sunil is doing in Canada. I think the private investment club is a great concept. I know that he's been really doing a great job building it, getting more members on a regular basis. But Sunil and I also have a goal to get 100 millionaires over the next number of years. And so we're on our way to that right now. And we'd love to have some of the folks that are listening to us as we speak right now that, might be in that potential club. So in that area to come join us. So love to have you as part of the $1 Million Success Club also. And I've watched Sunil over the years, and I've been up there a number of times, not only Toronto, but Ottawa and other cities. And just looking forward to all the cool things that Sunil is up to. And so, Sunil, I hope I was able to share a couple of enlightening things about raising capital, getting the right pitch, what you need to button things down, and maybe make a thing or two here. So successful. So maybe I'll throw it back to you guys and see if there's any questions.
Hey, thank you very much, Kevin. I know that you have a hard stop and you've been very generous. I'm looking this way because my monitor shows you there. But I really, really appreciate you, Kevin, because many years ago I was in Florida and I went to an event and I saw you on stage and I just said to myself, one day I'm going to do business with this wonderful man. And for you to come to this event to motivate, to inspire the members, and to do business with members of private investment club, especially if you're going to lend money and all that kind of stuff and do joint ventures. I wanted people to see what we're doing because you're a member of private investment club.
I am a member.
Brian Tracy is a member.
Last year.
Yeah, thank you for being a member. Brian Tracy is a member. Jack Canfield is a member, and Brian Tracy's son Michael Tracy is a member, and millionaires and multimillionaires. Thank you, Kevin, and thank you for being part of Private Investment Club. Thank you for being my good friend, and thank you for your generosity.
You got it. Thanks, Sunil. Thanks to everybody.
Thank you. Bye-bye.